This is Paul Singh, the market speculator, with the free weekly swing trade report. Let's talk about what happened to the market on Friday. We had this big breakdown, which we were somewhat prepared for because we were neutral to slightly bullish going into last week, which caused us to take less positions than we normally would when we're at all-time highs. There were some key things underlying here we were looking at. A lot of stocks were not participating in getting to all-time highs. There weren't a ton of breakouts. And we had this extremely long consolidation. So basically what we were doing was looking for a break of the 220 level and a hold of the 9 or a break of the 50-day moving average. Going into last week, that's exactly what we talked about here. And essentially, we were going to get bullish if we did break 220 and bearish if we broke the 50-day. And in one day, we broke the 9 here and the 50-day. Never really got that moving average sandwich. Just in one day, we got the gap down and then continuation. So because of that, what I normally do when I see something like this, much like what we did with in this Brexit area here, which led to some of our biggest wins of the year and biggest runs of the year, was go into sell-off mode. So as we broke the 50-day moving average, midday, I took a VIX position here, and hopefully this will load in a second here. Looks like I'm having some internet issues, but we took that VIX position because when the market starts to sell off, VIX tends to pop, and we can get some huge gains, much more than we can actually shorting individual stocks or shorting SPY. And you can see here in the past, we've had some huge pops in VIX, and those have happened when the market starts to tank. We're already up about 7% on this position, that intraday position. Our entry was around 36.40. We're at about 38.90 here, and looks like we're gonna move up a little bit at the open at about 39. There's going to be a small gap in the market. We're about a half hour before the open, and we'll see if we get that continuation today. So right now, basically what I'm going to do, my big focus list, my big watch lists are going to really shrink, and I'm only really looking at some of the major stocks like the FANG stocks, and I've got a list of shorts that I'm potentially looking at, and the indexes. And then as this is going on here, I'm going to build some potential watch lists for longs if the market does bounce. But in the meantime, there's one of two things you can do. If you want to sit out, that's perfectly fine. Just go into cash and see what happens here. Maybe eventually we do get a long setup. Maybe eventually we get a secondary short setup. So sometimes you don't want to play that first move. But if you are an aggressive trader like I tend to be, we will start to play this. So we entered two shorts on Friday, and that was AMBA here on this continuation breakdown of this level here. It's been a high flyer, which gives us some room to pull back. It doesn't necessarily mean we think the stock is tanking, but we are seeing some distribution even before the sell-off, and we could get a bigger move down. And also Tesla. Now this has been beaten down. We got this breakdown of this level here. And the idea here is if the market tanks and we break this level, we've got some room to move here. So I've got two shorts, and then my VIX position, which actually is a short position, even though we're long VIX itself. We're essentially saying this is a hedge for us. If we pull back and the market does tank, instead of going short, we can just go long VIX. Now, I did also enter earlier in the day when I wasn't sure if we were going to, how hard we were going to pull back. I took a position in oil. I still like oil overall if we look at this bullish pattern here and that cross of the 50-day in USO, while UCO, the leverage is lagging its 50-day, but that doesn't matter. We look to the underlying here, and we're still above. We are going to gap down this morning, so I'm going to watch how we handle the gap down here. Now, my initial stop was going to be around right in this level here, around 950. We're set to gap down right close to that level, around in the 940s. I'll give it a little bit of room here, but if it pulls back too far, I'll just get stopped out of here. And this was only a half position because we were playing this little pullback and weren't sure how far it was going to pull back. So it just took a little half position. I had actually talked about adding if we pulled back, but in this market, I probably won't want to add. I am just going to loosen my stop a little bit. So that's what we're looking at going into the week. So pay attention to the indexes. Maybe we get a secondary short here in something like SPY if it just kind of consolidates and breaks down again. Now, if it recovers completely, we can always go long. The two ways to go long are if we continue and then get kind of an oversold bounce play, maybe around the 200 or any of these open gaps. You can also look at some of the maybe the FANG stocks or something like that to potentially go long on a bounce play or short, and then pay attention to areas that are holding up well. And financials here actually did hold up decently while the market was down. SPY itself was down 2.3%. IWM here, which is more the low floaters, 3%, and the Qs 2.5%. Financials were down 1.8. Well, still down significantly, but held up better than these three key indexes. So we can keep an eye on financials, and if they show relative strength and the market bounces back, maybe this sector here will be ready to run, and it has been doing well going in. And then some beaten down sectors actually can bounce really well too. So we'll look at semiconductors here, which had been leading and got hit by 3.6%. Maybe that gives us a good bounce play. And then you can look at something like the FANG stocks, which Amazon actually does look like a decent short. But if these things bounce back, you could also potentially play the long side. So narrowing the watch list, and then we can go long and or short on any of these stocks dependent on what the market does. So we don't go into this week saying we're going to do this, we're going to do that. We basically use these if-then statements and then decide what we're going to do based on what the market does. So that's it for the trade report this week, the weekly swing report. Remember here, be flexible, pay attention to what's going on in the market. And then if you want more, we've got the daily swing trade report. And here's a recap of that VIX position, what I like to do during sell-offs. I posted a blog post this weekend. You can go on my Twitter feed and take a look at it, or go on Bulls on Wall Street. And then remember, you can go on bullsonwallstreet.com, go to Swing Alerts, and you can get my daily report, which will help through periods like this here. There's a daily, there's a monthly plan for $100 a month, and there's a yearly plan where you get 50% off, only $5.99 a year. So check that out. And for the rest of you guys, I will see you next week.